Let's look at a little bit at the economic implications. One of the interesting things is that if you go to the literature globally, there is never any discussion whether GST will have impact on economic growth. In our country, we have been talking about some growth numbers and GST. Again, there is no model, there is nothing, and no textbook, no specialized book, no IMF report, paper has ever talked about its growth and GST. So we can scratch that from our analysis, but inflation is an issue. Now, what does the research find? In that, the subtlety is that we need to distinguish between one-time increase in the cost of living and inflation. For those students, the inflation is defined as a persistent rise in the prices. So if you say that my inflation rate is 5%, that means it is a persistent rise of 5%. But the cost of living at one time is like this. So you have a particular event like GST occurring, so there's a one-time increase in price may occur according to the differential level of the rate that is levied. That's what we don't know on goods and services, what is the composite rate right now. And that's why I'm saying that it's going to be very difficult to say, even on cost of living, it will vary so much by states and by households that we have to be very careful. So when you say regressive, progressive, it implies it's across all income levels. But very few taxes are regressive, progressive across all income levels as such. Now what the research finds is that if you have a reasonable macroeconomic environment, and this is the IMF research, that when the VAT is introduced, you get one-time increase in cost of living over about 12 to 18 month period, which is approximately the same as the rate by which the VAT was increased, or if there was no VAT, the rate by which it was introduced. After that, the inflation dynamics is the same as it was before. So there is no impact on long-term inflation, but there is an impact on one-time cost of living. So one-time cost of living, however, still affects household welfare, particularly in our case, where we have to be very careful in terms of how the household welfare will be affected. So what do other countries do? What they do is they have complementary measures. Some will have other complementary measures that will say, okay, you will get 1,000 rupees voucher as a sort of to tide you over with the immediate impact of GST. Some will try to control the essential prices, make sure supply of tur dal and all the proteins and so on is right there, so the prices don't go up very much, or the vegetables. So that means GST is a comprehensive package. It cannot be done by isolation by itself. Now some people have also talked about savings and work incentives and equity I talked about, and the wealth impact. The savings and work incentive, there is no literature that will tell you whether GST will have an impact or not. Compared to what? So when you say when it will do, you say compared to what? There's no literature on it. On wealth effect there is, because what happens is that if there is a one-time increase in cost of living, then what happens to the real value of your nominal balances? If you got money in Provident Fund, or hopefully in the national pension system, I hope all of you join the national pension system, then the real value of that goes down. Right? So there's a wealth effect. So in a way, initially the GST in all countries have turned out to be a tax on wealth as well, and that needs to be recognized. The equity I talked about, so we can leave the economic impacts. Now I'll just go over very quickly the implications for each of the sectors. I already said it is in state's interest, and the state should be actually fighting for passing the GST as soon as possible. I was very glad that yesterday in Business Line, I think, Haryana Finance Minister gave a very nice interview that says it is in my state's interest, I want GST to be passed, and a lot of the things talked about that state will lose fiscal autonomy and so on are nonsense. That he doesn't think there is any such issue for the states. So now the implications for business, and this is important. The main motivations is in the EU was to improve accounting. So one of the relevant criteria will be how much accounting standards will improve. So that we have to do it over 5 years, in the next 5 years. New accounting standards being mandated for listed companies should help. This process is already underway. Another major implication is that with GST, current estimates of contribution and profit margins and logistics supply chain decisions significantly impacted by each state's sales and related taxes will need to be re-estimated. Appropriate changes made in both input procurement and use and output mix and pricing. The location decisions for certain goods and services will be affected. So there's going to be a lot of dynamics of business which is going to change, particularly about these issues. And that's a very detailed thing that each business will have to work out. This will be a major challenge. We need fuller design, so when it is there, the GST law still contains some dysfunctional compliance provisions that need a lot of refinement, and hopefully, I think the industry and the cost accountants are making representation to the government on that. In assessing impact on businesses, need to keep in mind that what may be negative for a sector, such as less opportunities for tax planning or evasion. So when I read articles in Business Today or in others, they'll say, yeah, we have tax planning नहीं कर सकेंगे, हमारा tax बढ़ जाएगा क्योंकि we have to report more fully than before. They regard that as a negative for them, which is, from their point of view, is negative. But that's the fallacy of composition that we all know well, that what is true of the part need not necessarily be true of the whole. So from country's point of view, that's a plus. That's not a minus. So please be careful when you read business, all the students particularly. When you read business, please, oh, हमको अभी ज़्यादा report करना पड़ेगा. Of course, but it's good for the country. Because that's what we want. That's how you increase the tax base. There are only two ways to increase the tax base. One is you increase the number of people who are in the tax registry. And our tax registry is very poor, as we know. That's what we are trying to improve. Second is that each person that is reporting what proportion of the true tax base it is reporting. 25% take chartered accountants or architects or doctors. What proportion are they reporting? They are reporting 30%, then you say, how do we get to 35%, to 40%? Those are the only two sustainable ways you can increase the tax base. So it's positive for the economy as a whole for revenue efficiency and fairness perspective. What about administration and compliance? GST will result in a shift from origin to destination. A lot of our tax officials don't understand that. A lot of even our tax practitioners, chartered accountants don't understand. Setting up of GST network as information technology platform could help fill the current information gap concerning price, and so provide benchmarking and audit trail for not just GST but potentially for income tax. So that would help. For the above, essential to link the computer system. Direct indirect tax board would need each other's cooperation and information exchange. Actually, my idea is fairly radical. I think we don't need direct indirect tax boards separately. We need to go back before 1962, where there was one, it's an Indian tax service and so on, and we need to professionalize that. Strong case to merge. Current sales, excise and other related officials at the union and state levels will implement the GST law. But if their attitude remains the same, their competency remains the same, there is no lateral entry into that, then they can't manage GST very well. I'm interacting with Haryana So I had 4-hour meeting with Haryana sales tax people and trying to persuade them to move. And I can say that it's a hard task. The broadening the tax base through increasing number of taxpayers, draft law is 190 pages long. One area where draft law needs to improve is the transition improvement. In almost every country which has switched to GST or VAT, the transitioning provisions of what they have been doing before, all the litigations, all the inventory, others, and so on, and those are not well defined in the draft law. That has to be addressed. Okay, I think the I'll stop here, except to say that the GST, if we can reasonably, competently implement and stabilize, will be an important milestone in taxing. India will for the first time get 2 broad-based taxes that a modern economy needs. Broad-based is, one is income tax, and we are already trying to broaden the base there. Second is the taxes on domestic goods and services, which is the GST is the pillar, and then there are a few minor ones in that. So if we can get both of those going in a fairly competent way, then we can manage India's rising GDP. Anant, you mentioned about the GDP around 2.3 trillion USD right now. And if you take even the 10% nominal growth, even if we take your 5, I think it's a bit low. Your 5%, but we take that and 5% inflation, then the 2.3 will become 4.6 in 7.2 years. 72 divided, that's a compound rule. So now in 7 years is a very short time to change the tax administration and so on. How much money will they be collecting? So a lot of time when I meet the tax officials, I ask them, and I give them this simulation and say to me, you will collect so much money. Have you got organization? Have you got computer systems? Have you got human resources? Have you got this? Have you got that? Have you got the attitude of service orientation to collect that kind of thing? And I think that's going to be our big challenge. So we need GST to succeed. Thank you.